Hi, my name is Harpreet, and I'm here to present my presentation on corporate accounting, my individual assignment. So let's start it with. Financial reports and statements are integral part of the accounting system. Mostly balance sheets and income statements are used. Cash flow statements are one of the most important and most ignored statements. Cash flow statements can be very important for decision making purposes as it reflects liquidity or cash flow in a company. In Australia, this is one of the most important documents based on P and L, is prepared on accruals basis and therefore does not reflect the reality of situation and whether or not the company is able to meet its final obligations. Therefore, in the assignment, we will cover the most important importance of cash flow statements and how an investor can make better decisions after reviewing cash flow statements along with the income statements and balance sheet. In this assignment, we have used BHP Limited, Santos Limited, Fantastic Limited annual reports from 2019, 18, and 17 these years to explain how to understand the cash flow statements and to calculate the financial strength of each company and analysis of this statement. So the part A is relative information content of income statement and cash flow statement. Why investors find both important. An investor must do his research before investing into any company, and as mentioned in the introduction, usually cash flow statements are missed out on. Therefore, it is important to review this as well as other statements. The relative information between both cash flow statements and income statements are as follows. First, gross sales. These will include actual sales for which the payment has been received. Second, expenses with adjustments. If the expenses are accrued, it will have to be adjusted to actual outflow of cash or payments made. Usually this is case in wages paid, superannuation, where most likely the payment for the last month is still outstanding. Additionally, the depreciation and amortization expense are added back and only the actual bad debts are taken into consideration. Profit. Third, the profit and loss on sale of the asset. Since this is only done for book purposes and no actual loss or profit occurs, this is required to be adjusted in cash flow statement. Fourth, income tax paid or refund. Only actuals taken into consideration. If this is yet to be paid, this will be taken into consideration when paid or received. Fifth, dividend income received. Only actual taken into consideration. Sixth, net income. The actual net income taken into consideration. As per the previous slide, the relative information from the operating activities section in the cash flow statement. This is one of the most important section of the cash flow statement as it depicts whether or not the company will be able to meet its current financial obligations. If it does, then does it generate extra cash and how this cash will be utilized or will it be able to pay off its non-current liability. If the cash flow from operating activities is a negative amount and this is consistent for a lot of years, then it is possible that an entity could also have an ongoing concern issue. If an investor pick this up, then he will be wise enough not to invest his money in this company because quite likely there are chances of it being liquidated in the future. In addition to that, there could be companies like Enron inflating its expenses to hide the borrowings so that it can maintain its reputation in market and keep getting investors to invest in company. This is a creative accounting tactic. Unfortunately, the auditor did not do a good job to highlight the issue, but if there was a good auditor and if this was picked up, then the investors would know that this company is not being able to meet its financial obligations and therefore would not invest in such a fraudulent company. So next, this part has three different. So there's a part B. This part has three different questions. The first question has multiple parts and this is based on BHP Limited, Santos Limited and Fantastic Limited. I will cover the highlights of each of them. So each company's highest source and use of cash was noted. For BHP, the highest source was from cash generated from operations for all 3 years, that is 2019, 2018 and 2017. The highest use was to pay dividends. For Fantastic, the highest source was from receipts from customers, and use was payments to suppliers and employees. For Santos, the highest use was for payments to suppliers, and source was receipts from customers. So for the operating activities trend, overall BHP and Santos had a positive trend, whereas Fantastic Limited had a negative trend. This means that BHP and Santos were able to meet their current financial obligations and were able to generate excess cash, and Fantastic could not pay its current financial obligations. The major reason for difference between the net profit after tax and cash flow from operations are mainly because of the following. First, depreciation slash amortization expenses were added back. Reason for adding this back is because there is no cash outflow and is only used to reduce taxes. Since we are looking at cash flow position and there was no outflow, this will be added back. Second, impairments, again this is not an actual outflow, so this is added back. Net finance costs, again these are borrowing costs or any such activity cost that has no outflow, and hence it is added back. Fourth, losses or profit from selling an asset or any such activities. So the above are only few to name, but in some cases there are more items to be considered. So the ability of covering capital expenses were checked for each entity or for each year, and overall for BHP Limited, and it was able to cover capital expenses from operating cash flow in all 3 years, that is 2019, 2018, 2017. Santos was able to cover for 2019 and 17, and Fantastic was not able to cover capital expenses in any of the years. In addition to that, ability to pay dividends were checked, in which BHP and Santos Limited were able to pay its dividends from operating cash flow in all the years it paid dividend to its shareholders, whereas Fantastic did not pay any dividends because of it did not make any profit. Even if it did, it would not be able to make the payments. Then we checked whether any firm made any excess cash, and if it did, how did they use that cash, and if any dividends were paid. As mentioned earlier, BHP and Santos definitely paid a dividends and also invested in capital such as purchasing assets, buying shares back and so on, whereas Fantastic had a negative trend and made a loss instead of extra cash and was surviving on loans that were borrowed from the financial situations. Then we checked BHP used its working capital other than cash and cash equivalents as sources and uses of cash, and as per the statement, it most definitely used it under the section of changes in assets and liabilities. Then we checked that what each company spent the most money on, and BHP spent mostly on paying dividends, Fantastic spent on paying wages and suppliers, and Santos spent on paying wages and suppliers. There were other things too at each company spent on, for which you will have to refer to the assignment. Dividend paid trend, as sort of discussed against cash flow from operations, was already discussed. Overall BHP had positive trend, Fantastic was negative because no dividends were paid, and Santos also paid a positive trend. Net borrowings trend, Fantastic overall had positive trend, BHP had an overall negative trend, and Santos had an overall positive trend. Clearly Fantastic had to be positive as it relied on borrowing a lot more than other companies. Working capital trend for BHP was overall positive. This shows the BHP paid more bills in cash and received sales amount more in cash in comparison to credit. This is a positive sign as there is a good cash flow from the company. So in this question, the financial now we are discussing financial analysis for each company. In this question, financial strength of each company was analyzed by calculation of various ratios. With this following were the analysis for each company. BHP Limited, as per the ratio calculations, it is evident that BHP is performing very well and is a very strong company financially. It is also able to cover all the expenditures, and if it wishes, it can cover its debts as well. I would recommend this company to keep investing in capital or other profit generating investments. It can also consider lending money if it wishes to do that in future and earn some interest income out of it. Fantastic Limited, as per the calculations for the ratios, it is evident that Fantastic Limited is currently struggling financially and has very poor financial strength and performance. It has been consistently surviving on external liabilities to cover its current as well as non-current financial obligations. The way it is going, it is concerning that it may lead to illiquidity. I believe this company should hire external help or consultation to see if they can improve their financial conditions as soon as possible. If not, there are high chance of this company going into voluntary administration. Santos Limited. As per the calculation, it does seem that Santos is performing well and is building up its financial strength. It is stronger than Fantastic Limited but weaker than BHP Limited. However, if we just look at the company on its own, it has picked up a lot on its cash flow from operations, which is very positive, and based on the calculation, it is doing very well, and I would call it financially strong. It does not have debt and equity capital structure, but I would not discourage any investor to invest in the company, as it has been consistently performing well from 2017 2019, and does not look and it does look this does look very promising. So next is I had to analyze which company can lend money to others. So this was done by calculating free cash flow. The main reason to use was to find out how much excess cash does a company have after paying off of all its expenses, including capital expenses. Following were my analysis. Free cash flow is equal to net operating cash flow minus capital expenditures. So BHP Limited has a free cash flow of $9,829. Fantastic Limited has free cash flow of $8,182. Santos Limited had free cash flow of $972. So, based on the above calculations, it is evident that BHP Limited and Santos both have a positive amount, which means that they have extra cash for paying for the capital expenses, and they both can lend money if they wish to and earn some interest income out of it. Fantastic Limited, on the other hand, had a negative amount, which indicates that they do not have any free cash or excess cash, or therefore are incapable of lending money to anyone else. It is also noted that BHP has more equity than debt in its capital structure, which makes it safest for lending money to others, whereas Santos has higher debt in comparison to BHP. So it is able to meet its financial obligation and would have a medium risk if it did lend out money. This does not mean that Santos is incapable, but probably should lend money only for a lower amount to play it safe. Overall, both these companies are able to lend out money and, if required, or invest it elsewhere. So in conclusion, overall, the cash flow statements are very important to know if a company is able to meet its financial obligations or not, and to ensure its actual financial position for a particular period or a year. Based on the annual reports of BHP Limited, Santos Limited, and Fantastic Limited, various things were looked at to understand the cash flow statement for each of them and compare it with another firm investment point of view. Eventually, it was noted that BHP was the strongest financially, followed by Santos, and Fantastic Limited was struggling to cope up with its finances. Out of three, it was also noted that BHP and Santos can afford to lend money to third parties, whereas Fantastic would not be able to do the same. It is quite likely that Fantastic Limited may go into voluntary administration because it possibly does have a ongoing concern issue. It would be recommended to invest only in BHP and Santos because they are performing really well, and not in Fantastic Limited. Thank you very much.